This week, we continue our exclusive interview with the nation's top producing reverse mortgage originator, George Vrban.
Building relationships is the way Mutual of Omaha has grown into one of the leading financial services companies in the world. Our reverse mortgage wholesale division is proud to carry on this 100-plus year tradition. To your borrowers, a reverse mortgage is more than a transaction. It's a promise of a better, more stress-free life. Our goal is to provide you, our valued client, with the best service and support possible so you can focus on helping your borrowers achieve the retirement of their dreams.
So what does your typical day look like, George, when you've got a team now? Are you talking to each of these homeowners yourself, or is someone else doing that?
No. I talk to the homeowners. I have to find the story out. I want to be the solution. I would try to do everything I can to help these clients out. So my goal is I do about 7 to 10 Zoom meetings a day. I work with clients. I was in a customer's home today. I physically go to people's homes as well. So I do it all. But what I do is when I get out there, my goal is to go ahead and do the education piece and go ahead and get them across the finish line as far as to do the loan. But then I have a great team that we created. Lori Muller, she's my assistant. So let me kind of tell you how the team works. So she's a very important role for me because she takes care of all my scheduling, my appointments. Literally, she books my day solid with appointments every single day. People calling in, wanted to talk to me, and that's what's interesting when you built this. If you built this the right way, referrals come from all over the place. It's like a faucet that somebody's turned on, it starts coming from everywhere. Financial planners, realtors. Another phenomenal piece that we got here I'm at Movement Mortgage. We're an impact lender. 49% of our profits are given back to these building charter schools for the last 4. Very proud of that. And we got loan officers here in this company that are doing over 3 a month as well, because the business we have here too is the forward loan officers that do only loan forward loans have to send referrals for HECMs to our way because this is all we do.
Yep.
We're an expert in this area. So we have a resource. We're going to team up with them. And we physically, that's another part of the networking opportunity that we have to build that business model. So those are all the different things that we do to kind of help build that team. But going back to the team, sorry, I got kind of off base, but then I have Dan Costa. He's a very important role too, because he helps me once I get the information. He follows up, collects the docs, calls the client, helps out with the application. I have that part of the team. And then we hand it over to Bill Schroeder. He's the transaction coordinator. He helps follow up and get the appraisals order. He goes and follows up if we need more documents. And then we have the closing department. We have the ops. Everything here is geared towards us helping us out so we can focus more on presenting and working with owners and helping the borrowers on a one-on-one basis. That's what we're focused on this particular place.
So you've really managed to scale this operation, but again,
yes.
It took time. And one point you brought up that I think is so important, and I think it's easy to forget this when you're going through the hard work of building a network, is it eventually becomes exponential, because these financial professionals not only talk to each other, but they talk to CPAs or attorneys, and the borrowers and their families talk to each other. So I'm so glad to hear that you've built that network. I have a question about HECM pricing, and by pricing I mean the upfront cost, which you and I both know, and our viewing audience knows, has been highly publicized. It's been one of the hurdles to the loan, although I believe that cost is an issue in the absence of value, as Ryan Ponsford reminded me of last month. But what's your approach to loan pricing today, George, and where do you feel that strategy has its merit?
Well, like you said, I actually use that same line, Shannon, where closing costs are only a concern in the absence of value. And I provide a lot of value for my clients. 20 years later, my clients are still calling me. So the way I explain to clients that have closing costs is, there's so many different perspectives on how you can explain closing costs. I wish I can do these things for free, but it's not free, right? And the biggest thing I try to share with clients is, look, you're using the equity of your property on the front end to fund all these closing costs. We roll it into the loan, right? But the way you make up for it, the arbitrage, is the value of the home on the other side. If you stay in this house for more than a couple of years, the value of the home, I don't care if it's 2% a year, will help offset all these closing costs on the back end. The key is not to do this loan and get out of it in less than a year. If you do it for less than a year, then it was an expensive loan. You didn't let the system work for you. What's ironic is the TALC, the total annual loan cost page, explains that exact same reason. The costs go down over time as the longer they stay in the loan. Where that comes into play is the value of the home is offsetting all these costs. But we have to be confident to explain that to the clients. I have an average closing costs in Florida. My closing costs are about $40,000.
40,000. That's incredible.
Yeah, because I do a lot of $1 million homes. So when you got 22,000 of those closing costs going to the government,
yep,
then another big chunk to Florida, because it's you're refinancing in the state of Florida here with transfer taxes. Luckily, we just got one of the changes here in Florida. But this is what I've been dealing with this for the longest time. But I create such a value that closing costs are not a concern when I get to the end, because what they're gaining, and if you're giving up a little bit of equity in closing costs, what you're gaining is physical cash. That is more important than anything. Would you rather have cash in your left hand, or would you have more equity in your right hand? I mean, what's more important to people in retirement? The goal in retirement is not to die with the most home equity. The goal in retirement is to have more cash flow.
Absolutely. So true. You know, looking at that whole approach, let's talk about this. When it comes to the pricing of the loan, that's one thing. But then you have people that are short to close. So what is your approach with short to close? Do you have loans that are short to close? I know that many watching right now are saying, yes, I've got a lot of loans that are short to close.
Yeah, there's going to be a lot of frustration out there because of the principal limits today, or took a major cut because of the rate sensitivity and what's been going on in the industry. But,
right.
And we're not going to be able to help every single person out there. But what's important is to understand is you can't prejudge. People can either prejudge in a positive way, or you can prejudge in a negative way. And what I mean by that is, unfortunately, people make the mistake of, when people get a short to close, or shortfall, and they don't dig deep enough, and they don't find out. Sometimes people won't find out, what do you have in your assets under management? Do you have 401ks, IRAs? Does it make sense to pull money out of non-qualified funds versus qualified funds? Do the numbers make sense? Is it better to give up 20, 30,000 from your other bucket of cash to do this concept, to save you 400,000 of cash of mortgage payments over the next 20, 30 years? Again, it's just, you have to be prepared. That's all part of the preparation of going into that house. You got to ask the right questions. You got to find out all this information. And, and this is the sad part about this industry too. And I'm not afraid to tell people on the screen. There are a lot of people out there today that don't believe in this product to get one for themselves. I don't understand that.
Yeah.
I said, if you're in the business, if you don't believe it, I'm going to be turning 62 in 4 months. You know what my shortfall is going to be? My short to close? $100,000. I'm bringing $100,000 to the table. And here's the logic, and I hope everybody hears this. My interest rate on my mortgage is 3%. So people always ask me, George, why would you trade in a 3% mortgage for a 6%, 6.5%, reverse mortgage?
Yeah.
I tell people all day long, because when I give my money to the bank, I'm not making anything more than 3%. Can I do better than 3% on my own money? Yeah, I can do better. So guess what? I'm going to free up $24,000 a year. I'm not going anywhere. I love my house. I love where I'm at. So I'm going to redirect my cash. I'm going to free up $24,000 a year of cash flow. I'm going to implement my own strategies in 5 years when my wife turns 62, because I got that's one of the reasons the shortfall is based on her age. But what's interesting is that's how much I believe in it, that I will do it myself, even with a short to close, because I got to pay the mortgage anyway. So I might as well go and pay it down now and start implementing my own strategies.
Absolutely. And you are I think the third reverse mortgage leader that I know that has. There's one on the West Coast who's done it. And he's investing what he usually had as mortgage payment. He's redirecting that into his retirement investments. And so you have to believe, you have to own what you're selling and do it yourself. I couldn't agree more.
Yeah, I mean, it's just, again, people keep asking, and everybody knows, do I need to do it? No. But do I want to do it? Yes.
Yeah,
I can afford my payment. But
absolutely.
do I need to? Do I want to? No. I'm going to show I'm going to just be more effective with my money, because this is the stuff that I teach. I'm a math guy. I work with financial planners all day long. When I do the math of my abilities, and if I redirect my funds, if people really understood how this product worked, they would get one today. If people really understood how this, I'd have a line outside this door.
Yep. Well, math doesn't lie, as they say.
Yep.
George, in closing, I have two more quick questions for you, but what are three things that you could tell reverse mortgage originators, professionals watching right now, three things they could do to help begin growing their business as well?
Well, there's several things. Like I said, the first thing we have to do is you have to come up with a business plan. You have to figure out which relationships do you want to develop out there today. Do you want to attack the realtors? Do you want to go ahead and what I mean by attack, in other words, go work with realtors? Do you want to work with financial planners? Some people are more consumer driven. Some people want to do all of the above. But what happens is you just got to come up with a plan, and then you just kind of go after it and kind of build it. But you got to be patient. Everybody wants instant gratification. It didn't work that way for me. It took time. It took me 6 months before I got it ramped up to about 4 to 5 closings a month. But then it got to 10 eventually. But the big thing is starting off with goal setting, business plan, reading the right books, even having a motivational coach. Coach Kevin McGovern, he was my coach, back in the day, and he's my coach here today. But these are, Brian Tracy talks about it the most. He goes, look, if you think you know everything about everything, you've fallen in what they call the intelligence trap, right? And what happens is you have to be open. Everybody needs help. You're on an island by yourself. You need positive reinforcement. The biggest key of why I'm doing what I'm doing is I'm surrounding myself, like the book from Think and Grow Rich. I'm surrounding myself with people that are successful, that people know what they're doing. Interest rates is another subject matter. Interest rates, right? Interest rate up, or it's going to go down. If you don't understand the retirement strategies, then you're going to always struggle with interest rates. It's irrelevant. I've been doing this for 20 years. I've seen high interest rates, low interest rates. We've changed so many things on this program, but everything was a matter of how to work around it and figure out a solution and keep your head down and figure out how to help those people out.
So how are you tracking with the number of prospects and loans? How are you tracking that so you don't let things slip through the cracks?
Well, there's a couple of things. First of all, I use your CRM, Reverse Focus. So I use Sales Engine, and I've kept track of all my stuff there. Thank goodness I had that, because I wrote a ton of notes for a lot of people throughout the years that I've been doing this. So your system is what's helped me keep track. Another piece too is I have a big whiteboard in my office. What everybody's on is if you can getting to 10 pipeline, and you close 3 or 4. The goal is to figure out how fast you can get to 10. But I stare at that board. As soon as I let 1 or 2 closings go, I replace it with 2 more applications. If you stare at that whiteboard, and it's all part of the visual, right? It's all part of understanding how do I keep my pipeline going? Well, that's how people can do that. But you got to create activity to get the applications.
Yep.
So you got to get out there and figure out what are your different ways that you can create these opportunities. So.
Absolutely. Well, I mean, if you were, on the road and you were covering the state of Florida, you were probably in hotel rooms many nights.
Yeah, I was. And then sometimes I drive all the way back, but there's some long days. I literally was at the very beginning, before I even went to go back into the field. I was thinking of going back into insurance. So I was frustrated just as long as with everybody else. I just wasn't sure what I was going to do. I was like, okay, well, I guess I'll stick it out and let me go out in the field and go out there and see what I can do. And that's what kind of turned around for me. I was with, a combination of my faith. My faith has a lot to do with it too. Nobody likes to talk about that stuff, but I'm not embarrassed. My faith was a big part of my journey to get me through the tough times at the beginning. And now today, I'm giving back to the community. I'm blessed because of all the things I've been able to do in the last, 8 years. So, but yeah, I mean, Shannon, you're a big part of this success. I can't tell you how much and again, you and I have been following each other for years, and I always follow Heck 'em World. I listen to it. You've been a big attribute to this industry.
Thank you.
So I appreciate all the things you do to keep the knowledge level, the spreading the word. Between you and Dan Holquist, I got a good chunk of my information from you two guys. Yeah, I mean, I really appreciate everything you have done too.
George, thank you so much for spending your time with us and sharing with our reverse mortgage professionals who are watching your insights and what you've learned over the years. We deeply appreciate that. Folks, be sure to share this episode because I know it's going to have incredible value for your fellow reverse mortgage professionals. You can do that on LinkedIn. And by the way, we have a YouTube channel where you can find this episode and others. You can subscribe and hit the notification bell. That way you never miss an upcoming episode. And if you want to catch up on all news reverse mortgage related, you can do that in part at heckemworld.com. We have both an audio and video edition of that podcast, and you can listen and subscribe on iTunes and Spotify as well. Thanks for joining us, and be sure to return next week for more reverse mortgage news you'll only find here at Heck 'em World.